So today I'm going to do a video that upsets the apple cart a little bit. This stock is having a fantastic day today, but saying that, I think it's overvalued, and I know I'm going to upset a few people today. I know I'm going against the echo chamber of YouTube where everyone's a big fan of Palantir, but in my opinion, I looked at the stocks today and I went, this stock's getting a little bit overvalued, and I thought with the stock jumping up so much today, I'd talk about why I think it's overvalued and go against the grain on YouTube a little bit, and why I think Palantir is one that I would be stepping away from a little bit at the moment. So hope you enjoyed the video. Let's get started. So Palantir is a very popular retail stock, very much like Tesla. Tesla's a very popular retail stock, and I know I upset a few people 9 months ago when I said Tesla is, I won't say the word meant screwed, and I said Tesla was screwed 9 months ago. Palantir, I don't think is in as much of a mess as Tesla because the financials have been doing really well. 9 months ago when I said Tesla was in a bit of a bad place, is the reason why is I thought profit was absolutely going to collapse, and that's what happened, and the stock's been punished from it. Palantir is a little bit of the opposite. I actually think the financials are actually very good in Palantir, and I don't want anyone to get the wrong end of the stick here. I think Palantir is a good company, and if Palantir actually went to the right price, I would buy Palantir. However, I looked at the stock price today and seeing the stock up 30% today, I looked at the stock and I went, wow, this stock for me is, I don't think it should have been up 30% today. And I think the stock is severely overvalued at 45 billion. But like I said, I still think it's a good company. I just think the stock is overvalued. And I think anyone that's currently buying the stock at $21 is a bit of an idiot. That's what I wanted to make the video on today. Now, like I said, I don't want to sound like I'm a bear on Palantir. If you give me Palantir at a good stock price, and I'll say what that stock price is maybe at the end if I remember. If you gave me at the right price, I'd probably go buy Palantir. You know, if you look at the end of the day, what do you need to have a successful investment in the stock market? You need to have profit and revenue growth. And when you look at Palantir, what do you get? You get the revenue growth and you get the profit growth. Financially, they're performing very well. And even if you buy Palantir at a bad valuation, which, by the way, I think would be a bad valuation right now, you probably would still make money on it if you do hold it for the longer term of 4 or 5 years. So I'm not going to bet against Palantir. I'm not going to open a short position on Palantir. And we've seen before, plenty of these stocks that can build up hype can go to crazy high valuations. So this isn't me video saying that I'm betting against it. I'm not shorting against it. And it's a good stock. Like I said, financially, they're doing everything right. The profitability and revenue are moving in the right way. However, I think the valuation is crazy. And I think there's a few people on the YouTube scene in particular, on this echo chamber, that say it's still cheap. And I don't think it's cheap at all. I think this is a very expensive stock. And I'll go for the reasons why I think it's expensive and why it's overvalued. And PS, by the way, I also want to add it's also got a cracking balance sheet as well. So don't think it's anything against the balance sheet either. But Palantir is up 30% today. The reason why is they brought out earnings. Now, when you look at earnings, the EPS came in line. So, yeah, not much of a shock there. Basically what analysts were expecting. From a revenue point of view, the revenue came in at 608 million, beat 5 million. Same again, there's not much of a shock there. Like, yeah, the revenue's okay, but it's not crazy beats. It grew 19%. Decent growth as we can see here. Commercial growth looks very impressive at 32%. Government revenue, not as good at 11%, so we can see a lot of the commercial growth is driving the current growth going forward, so probably you would say the government revenue needs to increase. International as well was a little bit of a improvement that we need to see, but obviously commercial is doing very well. Now when you look at the outlook, same again, I looked at the outlook and I was thinking, when I saw the stock up this much, I was thinking yesterday the outlook was crazy ahead of expectations. But when you look at the outlook is basically in line with what the market was seeing. And same again, I was looking at this jump in share price and I was thinking Palantir brought out a guidance that's so far ahead of what the market expectations were, and it wasn't. And for me, I was looking going, yeah, EPS in line, a little bit on the revenue, outlook in line. Yeah, it's a decent quarter, but it's nothing crazy. Maybe it has a good day. I could not believe it when the stock is up 30%. I was absolutely shocked. And digging into the earnings as well, there wasn't anything that I saw that kind of showed me why the stock deserved to be up as much as what it is. I mean, I was looking at the stock and listening to the conference call, and I couldn't find any things that were driving it up. Now, this is the conference call. I mean, maybe the reason why the market was getting so excited about it is because the CEO went on to mention AI multiple times, and then we know how AI is the buzzword of Wall Street, and maybe that got Wall Street hyped up. They mentioned multiple times, or the CEO mentioned multiple times about the demand and how much demand they have, and maybe that got everyone hyped up about Palantir. But I looked at the earnings report and I couldn't see anything that deserved for it to be up 30%. And what a lot of people don't show you as well in the earnings report is like some of the negatives. Like I was looking at the negatives and going, commercial is still poor, international still poor, total stock compensation is still sky high on this company. If you're a shareholder of this company, you're still getting diluted to hell. That's still a big issue that no one seems to talk about if you're a bull on this stock. And then I was looking at the valuation. And I was even seeing people saying it was still cheap. I think I saw Financial Education saying, it grows 3 times faster than the market average company, so it should trade at a 3 times multiple of what the average market company is. And it was like, come on, mate, like that is not true. When you get to a company like Palantir, sure, if you've got good growth, you trade at a premium. But this company is now starting to become a mature company now. This is becoming a major company at 36 billion. You actually start judging this company off now profitability. You start judging this company off free cash flow. And as I look at Palantir, I was going to actually work it out, and I got a calculator up, as you can see here, but I thought, you know what, I'm just going to search it. Let's just search it. And if you look at Palantir, for example, this company's trading at 71 times free cash flow. Price to free cash flow is 71 times. Now, granted, the average is 87, but even then, I think this is crazy. What do you realistically want to be paying up for a decent company? I mean, if we have a look at Palantir's financials, and a lot of people are going on forward PEs and going, look, the forward PE is going to drop from 238 down to 63. That's such a good deal. But, the forward PE is jumping, but the only reason why it's jumping is because they went from like a 0.07 EPS up to 0.29 or 0.25. Realistically, that was just a one-time jump. If you look at the moment, EPS is going to go from 0 to 9, and then it's going to go to 0.36. It's not like the EPS is doubling. It just had one-off jump. So that earnings ratio is still high. And if you look at the growth, I mean, it's not like it's a rapid growing company. If you look at this year, 2024, the company's still set to grow at 19%. Now that's good. A lot of companies wish they could grow at 19%. And next year they're forecast to grow at 20%. But realistically, for a company that is going to grow EPS at maybe 20%, revenue at 20%, can you justify paying 71 times free cash flow for that business? I think realistically you'd want to be picking a company up that's doing these. Let's say a normal market average company, you might want to pick up 15 times free cash flow. Let's say you pay a premium because it's growing at 20%. I think realistically you'd want to pick up a company like this at 30 times free cash flow. This is over double the free cash flow that I think you would be willing to pay up for Palantir. And just to put that into context about Nvidia. Now, Nvidia is a company that trades at even higher free cash flow. This is trading, everyone would look at Nvidia and go, it's in a bubble. But you look at Nvidia and it trades at 98 times free cash flow. So this is 20 times more than Palantir, right? But when you look at Nvidia and look at the difference between Palantir, and by the way, I'm not saying Nvidia is cheap. I still think Nvidia is okay. I don't think it's overvalued, but I don't think it's cheap. But, look at the difference between them. Yeah, Nvidia pay up 20 times more free cash flow. But Palantir is going from an EPS of 0.25 to 0.29. Nvidia is about to do an EPS from $3.34 up to $12.31. And then it's going to go from $12.31 to $20.92. Palantir is growing at 19.5% this year. And I know a few people that are fanboys on Palantir will go, yeah, but it's actually going to grow at like 21%. They're sandbagging the numbers. Fair enough, even if you go 21%, right? Nvidia is about to do a year this year, growing at 119%. So when you talk about a company and you're willing to pay up a multiple of 71 times free cash flow, or what everyone's pointing out at the moment is 60, whatever it is, 60 times earnings, is it? 63 times earnings. But realistically, is that fair for the growth? And in my opinion, I think that I would pay up for Palantir at 71 times free cash flow or 63 times earnings. If we were talking about a hyper growth company here, for me personally, I don't think the growth here is enough to justify paying up that valuation. I think Palantir realistically to justify this valuation would have to be growing 30-40% a year. I think that's where you would have to be growing. Now, what I will say, and I can see a few Palantir bulls in the comment section saying this, is that, yeah, but what will happen is, US commercial revenue is on fire. If they are able to start getting their government revenue from 11% up to 30%, then they'll be able to do that. And hey, if they were able to do that, if they're able to grow their international business faster, grow their government revenue as much as their commercial revenue, hey, you know what? I'll hold my hands up and I'll say I was wrong. But at the moment, they're not doing that. That's not what they're doing. So when I look at the numbers at the moment, I think this is a way too big of a valuation. I think when you're picking up a company that's going to do 278 million in profitability and it's valued at 45 billion, I personally think this is way too much. And like I said, I'm not betting against Palantir because I think it's a good company. And like I said, if the government revenue or the segment comes back massively, hey, I could quite quickly be proven wrong. And I'm not going to bet against Palantir. But I looked at these earnings and I thought this was an average earnings. I thought that, in fact, I'll go as far as saying the good earnings. I thought if you're a Palantir shareholder, you'd go, yeah, I'm really happy with that. But there's no way today I looked at that stock and went, that stock deserves to be up 30%. And today, I couldn't believe people were buying the stock at $21 at a 45 billion valuation when the company's trading at 71 times free cash flow. Or you're paying up for a company at 45 billion that is doing 278 million profitability. That's absolutely insanity to me. That's like, looking at that, I was getting 2021 vibes. That 2021 bubble that we had, I was getting that vibes looking at Palantir today. Now, like I said, I wouldn't mind owning the company. But realistically, if I was going to get Palantir, I would be looking at like $10, $11. I know a few people might be like already typing it, slamming in the keyboard, going, Jacob, that's absolutely ridiculous. But at the end of the day, that's where it was a year ago. So don't say it's impossible because it was there a year ago. But for me, yeah, I looked at the stock today and I went, I thought I'm going to have to make a video on it. Like I looked at it and went, wow. To be up 30% today, to see people buying at 45 billion market cap, I just thought is one of the clearest, obvious, overvalued stocks we've seen on the stock market for a while. And I thought I'm going to have to make a video saying that. Eventually, Palantir might grow into that valuation. Like I said, if you buy this now and you're willing to hold it for 5, 6, 7 years, you still might do okay on this position. But realistically, for what you're paying up for it at the moment, I think is massively overvalued, and I think there's a lot of better opportunities in the market. And all those that are still saying like, oh, Palantir is going to the moon, it's still a cheap stock, I totally disagree. And for all those that are saying there's no negatives in the earnings report, I still think there's a few negatives in there. Commercial's still weak. I still think total stock-based compensation is sky high on this company and people aren't realising it. But like I said, at the right valuation, I could own it. But I was also shocked to see the amount of people that were hyping it up at the moment of $21, a 45 billion market cap. I thought was absolutely crazy. So yeah, that's the video on Palantir, guys. Hope you enjoyed it. Let me know your thoughts on Palantir in the comment section as well. And I'll see you all in a bit.